right. Thank you so much for joining me today for this impactful LeadHERship Global event called Creating a Cash Flow Plan, the simple and intentional approach to profitability, with our amazing superstar, Vicki Holman, cash flow consultant and manager and host of the Financial Freedom Show on the Thriving Women Network. My name is Colleen Chesley. I'm the CEO of LeadHERship Global, which is a confidential, supportive, and private community for influential women all around the world. In LeadHERship Global, we create and support personal and professional breakthroughs and guide women to greater levels of leverage and freedom. As a member of LeadHERship Global, you have the opportunity to be inspired and motivated by other women leaders who will cheer, counsel, and support you to greater levels of success and impact. If you would like to learn more about this global community of world-class women thought leaders and experts, please don't hesitate to reach out. I'll be dropping more information in the chat as we move forward with today's event. Today's presentation is phenomenal. I already saw a little bit of this presentation over the weekend as Vicki was a guest speaker for our LeadHERship Global Weekend Retreat. And I'm so excited for her to be bringing this information here to our Global Council meeting today. In today's presentation, Vicki will explore how a well-structured cash flow plan can significantly impact your financial journey. Through a comprehensive understanding of vital components, we will examine your current business allocations, develop a revenue target, analyze allocation percentages, and delve into target allocation percentages. These crucial elements are designed to propel your business forward as you strive for increased profitability. Today, we're going to guide you in navigating the intricate landscape of creating an intentional and executable cash flow plan, even if you don't consider yourself a numbers person. Using the real-world examples and actionable insights, you will acquire the knowledge and tools necessary to formulate a plan aligning your resources with your aspirations. Whether you're an entrepreneur aiming to expand your business, or a business owner trying to increase profitability, you will leave this presentation empowered to create an intentional cash flow plan that paves the way for lasting success. And our guest speaker today, Vicki Holman, is a trusted consultant who draws on her impressive background as a certified life coach and a dental office practice administrator. She possesses a deep understanding of cash flow management, meticulous financial record keeping, and streamlined processes. Her expertise has enabled her to assist numerous small business owners in optimizing cash flow and profitability, facilitating effective business scaling as well. What sets Vicki apart is her personalized approach, tailoring essential business allocations to align with each client's unique preferences for systems, processes, and banking solutions. Her deep understanding of these areas has allowed her to help numerous business owners optimize their cash flow and profitability, facilitating their successful business growth. Please warmly welcome our featured presenter today, Vicki Holman.
Thanks, Colleen. That's quite a mouthful, I think. I am going to go ahead and share my screen, and we're going to get started because we are going to talk numbers. We're going to talk money today. It's one of my favorite subjects, and not in a bad way, but the more I talk to people about their cash flow and their profitability, it seems to be such a taboo subject. And I want to make talking about money normal, especially as business owners, because we have to have it. We have to have the money. It's a resource. So let's talk about it. And so I'm going to tell you, we are going to be creating a cash flow plan, at least part of it, a really major part today. So get prepared, get mentally prepared, get your calculators out, get your pencils out, get your paper out. I'm also going to give you a little cheat sheet. It's not really a cheat sheet, it's a workbook. So if you want to go ahead and scan this QR code, you can download the workbook and work through with me throughout this presentation. We're going to go step by step. It gives you the steps and we can work through it together. Now, if you don't want to download this workbook, that's okay. You can take screenshots or you can just do it with a pencil and paper, but the workbook's going to be easier. I'm going to give you a few minutes. I'm going to talk for a little bit before we really dive into the numbers. So feel free to, again, scan this QR code and download the workbook and we can get started. And please make sure if you have questions throughout the time, there will be a time at the end, but I am going to try to build in, breaks so that we can make sure that everyone is really clear about what we're talking about. Okay, so here we go. For me, what we're going to do today is I'm going to tell you first what my definition of a cash flow system is. Now, I have heard lots of definitions and lots of ideas. And so I want to tell you what my definition of a cash flow system is. And then we're going to create part of that cash flow system in your business today. And then we're going to wrap it up and answer all the questions. So let's get started. Who am I? Who is Vicki Holman? So I like to say that I'm currently in the honeymoon stage of my life. Now, I'm not recently married. I've actually been married for almost 33 years. But I am in love with my life right now. We recently moved to Saipan. In June of this year, we sold everything and moved halfway around the world. If you don't know where Saipan is, it is about 100 miles north of Guam. It's an island. It's part of the Northern Mariana Islands. That country has 14 islands, and Saipan is the largest island in the country. And it's a tropical island, and it's beautiful. So you'll see throughout my presentation, all of the beach shots and the beautiful water shots are actually photos that either myself or my husband took from Saipan. I'm an empty nester. My baby just graduated from high school. All of my kids are in college right now, but he, left the nest. And so I am an empty nester. That's new. I'm a business owner and I'm a reformer, doer of things the hard way. I like to find an easier way to do things. And I'm living an intentionally simple life. When we sold everything, I just wanted to get rid of all of my stuff. And it was really liberating. It was such a liberating experience. Okay, so this is my love, my life, my heart. We love to do things outdoors as a family. We love to go skiing. We love to travel, Bryce Canyon, snow skiing, now tropical island stuff. This picture in the top left was taken on a cruise in August in Greece. It was the first time that we had been together for a family vacation in probably, I think, 7 years. But just take note of the two kids on the end because I'll show you why. So we're going to talk about my entrepreneurial journey. I want to tell you about me and why I'm here and how I became an entrepreneur. I was raised an entrepreneur. My dad as I thought about it, he would build a business from the ground up, including building the building. And I can count 10 businesses that's what he modeled for me. And so I thought that was what you do. I grew up reading business plans and construction blueprints and profit and loss statements. Like that's what we would talk about. So I found myself in 2010. This is my husband and I in 2010. He was graduating from dental school and I was graduating with my degree in finance from the University of Missouri, Kansas City. And we were at a crossroads. We had to decide what we wanted to do with our life after dental school. And he was really perfectly happy with simply going and working for somebody. Not me. I have an entrepreneurial spirit. And so I'm like, no, why would we do that? Why wouldn't we just build our own practice and build our own business? And so remember those two kids on the end? That's these two little ones here. So you can see they were a lot smaller. But so during my senior year of college, I wrote a business plan I presented it to banks. I got turned down by several banks. And I got one bank that approved us, that was willing to take a gamble on both my husband and myself. I designed the dental office, and this was us breaking ground in April of 2010. Before we graduated from either of us graduated from school, and we're breaking ground. So we just jumped in with both feet. So this was the building that we built. It was a beautiful building. I love that building. And for the next 11 years of my life, I lived and breathed this dental office. It was not unusual for me to do 60-hour work weeks. And my husband rarely did more than 40, but that was okay because he helped with the kids. But I did everything but the dentistry. He said he needed time to figure out how to be a dentist. And if we wanted to do a business, I would have to do everything else. So I did the HR, I did the IT, I did all of the accounting, all of the bookkeeping, all of the insurance, like everything. I had to figure it out. And it was a lot of work, but it was also a lot of reward. Throughout that time, in 2019, I found myself things were getting stabilized at the office, but I also wanted to figure out how to improve my management skills, but also improve my relationship with others, but also improve my relationship with myself. And so in 2019, I became a certified life coach. And this was my life coach picture with the obligatory mic. But that really made a big impact in my life and how I viewed the world. Then in April of 2021, this photo was taken, the last selfie as we were leaving the dental office. We sold the dental office in April of 2021, and you might notice that I had been crying, lots of tears, saying goodbye to that office and to all of the employees that we had called family. And then the next day, this was at the title company. I was so happy. It was such a relief, but it was a bittersweet moment too. And during that time, we had built it from the ground up. We had done over $2 million in revenue, and I had 13 employees, and we had treated over thousands of patients in Southwest Kansas. And so it really was a full circle moment for us. Okay, so let's talk about creating a cash flow management system. I love talking about this because you have to know, when you think about a GPS, you have to know where you are now before you can figure out where your destination is. And so a cash flow management system is the same type of thing. We're going to figure out where you are now, then where you want to go next, and then finally, what is going to be your end destination. So I think of a cash flow management system like an irrigation system. If you don't have a cash flow management system, it's more like a flood irrigation, to where you let the water go, you let the resources go, and you hope it hits where it needs to hit. You can see on this irrigation system that some spots are a little bit low with water. Maybe they're not getting as much water as they should. Where in the back, some spots are maybe too much water. They're flooded. Instead, what we want to do is we want to create a cash flow management system that is similar to a drip irrigation system, where you have just the right amount of resources exactly where you need it when you need it, and don't waste anything. So for me, my definition of a cash flow management system is quite big or quite extensive. So it starts all the way from beginning and thinking about getting the cash or getting the money into your business. And so it includes pricing and packaging, and making sure that when you're pricing your services or your products, that you have profitability built in. You want to have intentional profitability. And then your packaging, how you package your products and your services matters. It matters because you want to do things that are good for your clients, but you also want to make sure that you are making it beneficial for your business. Next is accounts payable. Do you have a system for your accounts payable? And are you using that system to help get you the cash when you need it most in your business? Next, this is where we're going to start talking about it, is the present position, where you are now, how you're currently allocating your money, where you want to go, which is your destination, how you want to allocate your money in the future, and a revenue target. You need to have an actual target, an actual number based on data to have a revenue target for a goal. And then you have to have a way to implement the system. You have to, all of this stuff needs system implementation. And finally, the very, very important part is understanding your forecasting and modeling. Now, there's a lot in the cash flow management system, but today we're only going to be talking about three. We're going to talk about the middle three. I think of it like Star Wars, where you start with episodes 4, 5, and 6. That's what we're doing here. A lot of people, when they're talking about a cash flow system, they're only talking about these three. But to me, a cash flow system is much bigger than that. But we're going to start with the present position, the destination, and a revenue target. Okay, here's another gorgeous shot. But we're going to talk about the cash flow system. So typically, when you think about a cash flow system, or you think about profit, let's say it this way. If you think about profit, it's revenue minus expenses equals whatever's left over is profit. I think of it as putting all of the money in a giant pile, and then you're straightening up the money and you're hoping that it's organized and you're hoping you're going to have enough. And you're not really sure. You might give a little, here's some payroll and, oh, I need a new computer. So here's a little more money. Do I have enough money for, expansion? Well, I'm not sure. Let me check my bank balance. I also call it bank balance accounting, to where you're looking at your bank balance to determine whether or not you have enough cash for your business or for purchasing that next thing. I want to look at it in a different way. I want to look at it where you take revenue minus profit equals expenses. And that profit is an intentional profit. You take it first, you pay yourself first. And so it's more like an envelope system, to where instead of that giant pile of money, you're going to separate it out on purpose into different envelopes. So you're going to take profit off the top. Maybe you're going to pay yourself. You're going to pay your taxes. And then whatever's left over, then you're going to use that for expenses. So it's a little bit different way to organize your finances. So let's talk about those envelopes. What are some of the major envelope categories and what do they mean? So first, like I said, is the intentional profit. We want to have an intentional profit. And again, what that is it's money that you take off the top so that you can make sure the business is profitable and that you don't tap into it to spend on your expenses. It can also be a bonus at the end of the quarter, where you take a quarterly profit distribution, and maybe you take half of it and you leave the other half in your business for reserves or to create an emergency fund. Maybe you use that profit to pay down your debt, to reduce the liabilities that you have. It is just a category that you want to make sure you have that's separate than all of the other expenses, and it doesn't get forgotten. I don't want you to forget about your intentional profit. And there's one thing that's for sure is, if you actually didn't tap into your profit ever, you are guaranteed to be profitable. The hard part is, allocating and reducing your expenses or having enough revenue to make sure that you have that intentional profit. Okay, so the next category is owner's pay. This is the amount that you are paying yourself for your living expenses. Let me repeat. It's the amount that you pay yourself out of your business that goes towards your living expenses. It's intentionally paying yourself. Now, if you are an S Corp, it could be W-2 wages. If you are a sole proprietor, then maybe it's your owner's draws, but it's the amount that's going towards your living expenses. Next are the taxes. These are income taxes for yourself, or your estimated taxes. These are the amount of money that you are giving to the IRS or to your tax authority. Now, if you look at those three items, they are all benefiting the owner. And I've had people say to me, why don't we just have one giant pile? because I want you to be very intentional about those piles. I want you to not have to pay your taxes out of your owner's pay. I want you to know how much owner's pay you need to have to cover your living expenses. And then I want you to have a benefit of owning a business, which is the intentional profit. And then finally, the operating expenses. So if you're familiar with GAAP, this is not GAAP because this includes all of your principal payments on your debt also. So operating expenses is just everything else that goes into running your business. And so again, if you're familiar with GAAP, this is not GAAP. It's not just the operating expenses on your profit and loss. It's all of the other money that goes out to run your business. Now, once you get these 4 major categories figured out and feel like you're comfortable with, you may decide to add additional categories just to break it up, because that operating expenses could be pretty big sometimes. So it could be you create a separate category for payroll. Or if you're getting ready to scale, you're creating a separate category for scaling expenses. Or finally, reserves. Another word for reserves is emergency fund or savings for your business. You want to be sure that you also have reserves in your business. So yes, if you are familiar, I am talking about Profit First by Mike Michalowicz. It is such a great system. I love Profit First. It is a really, really great place to start. And just as a full disclosure, I am not currently considered a Profit First professional. A year ago, I was. It's interesting the way that they do it. They tie the certification to the organization rather than the individual itself. And so because I was working and trained by a master level Profit First professional, as long as I was in that organization, I was considered a Profit First professional. Since I've left that organization, I'm not, and I have to wait a year before I can reapply. But the information in the book is incredible, and it will help you really build a profitable business. So it is a great place to start. And one of the reasons why I like Profit First so much is because you can make it fit your business. And I'm going to show you how. So the first thing that we want to do is we want to think about our journey, where we want to go, and what is our destination. But first, we have to know where we are now. And so here is the first. If you did not download the workbook, go ahead and take a screenshot of this. This is what we're going to talk about first. The first thing we have to do is you have to discover what your present position is, where your business is currently now, so that you can know where you want to go in the future. So I'll walk you through this, and then I'll show you an example. So you're going to be entering the items A through G. You're going to get this from your profit and loss statement. You may need to get out your balance sheet also. In line item A, it's your gross sales. It's your top line revenue. Before anything is taken out, that's where you're going to enter your gross sales. Then if you have materials costs or commission costs or things that typically would go into cost of goods sold, you would put that in B and C. If you don't have cost of goods sold, which a lot of us here do not because we're service providers and not really for products, skip that. Just skip that line. And then you're going to go through and you're going to figure out how much your profit is. This is an intentional profit. Did you take out intentional profit? This would most likely be on your balance sheet, and you probably don't have one unless you've implemented the system already. And that's okay. If the answer is 0, put in 0. And then owner's pay. You can do D, E, and F in any certain order. It doesn't have to be in a certain order, but just make sure that you're filling it out. So your owner's pay would include your W-2 wages if you are an S Corp, and then also any draws that you took out. So you would be looking at both your profit and loss and your income statement. And then taxes. Taxes, again, is amount that you have that is set aside specifically to pay income taxes. And then finally, I do operating expenses last because it's really easy to just add up your profit, your owner's pay, your taxes, and then just everything else goes in operating expenses. So I'm going to see if we have any questions before I move on.
I think the only thing, Vicki, was somebody missed the QR code to download the workbook.
Okay, so let me go back because I don't have that handy. I'll just jump back real quick to that. And I'll give you the QR code again.
Yeah, and you're getting some really good comments in here too, Vicki, about the quality of information. So I think even though they don't have any questions, I think you've stunned them into silence.
That's a good thing, right? Okay, I'll give you the QR code just a minute. The other, you know what? The link, and maybe Colleen, you can write this down. It is also www.ebandcashflow.com/LeadHERship is the web address, is where that leads. So www.ebandcashflow.com/LeadHERship. Okay, so I'm going to jump back to where we are so we can go over this. Thank you, everyone, for being patient with me. Okay, so we're going to be filling this out. So the previous period, I didn't mention that. So I would recommend if you have up to 12 months of financials, that's going to be the most accurate. The more you can get, the better. I wouldn't go more than 12 because anything more than 12 might be too much. And then you're going to divide that to get your monthly average. I would say, ideally is 12, maybe 6 months or 3 months, whatever it is, to where you can feel like you have a really pretty good feel for what your financials are looking like. So you're going to do your monthly average, and then you're going to calculate the percent of gross sales. So how much of those gross sales, what percentage of the cash in your business is going towards each of those categories. So let me show you how this is done. So this is actually 3 months of financials from our dental office, the last 3 months before we sold. And so these are real numbers. And so I wanted to show you how it works. So you're going to, again, number of months is 3. You don't have this on your sheet. This is what I give my clients that I work with. But you can see how many months it is so that you'll know how many to divide it by. So you get your monthly average. Our total gross sales was $586,341. So that made a $195,447 as the monthly average. We did not have any materials and commissions cost or other cost of goods sold. And so then we dropped down. Now, on the owner's pay, on our profit and loss, my husband's salary was $61,200 for those 3 months. So that averaged out to be $20,400 a month. And then I went over to the balance sheet and looked, because I had implemented this system already. I had intentionally had a quarterly profit distribution of $15,000. And then our taxes, I'll tell you about our taxes in a minute. But our taxes, I was intentionally saving a lot of money for taxes at that point. And so I just minused everything else to make this balance. So everything else came out to be $451.41. So I want you to note here is the percentages. Those are the percentage of how I'm currently allocating that money. My present position. So we're looking at the percentages to be for your present position. Okay, so why did I do that? That was kind of painful. Sorry, I got ahead of myself. Why did I do that? That was I'm forcing you to look at your money, and that's hard sometimes. But I think it's so important because money is so emotional that if we can break it down to the data, break it down to the math, we can get the data to where it's unemotional and we can make sound decisions based on data. Sometimes it's hard to be honest with yourself and to know where you're at, but you have to know where you're at to be able to start a new direction. And I like to call this beauty in the sea glass. And this is because this is part of my sea glass collection. I have started collecting sea glass since I moved to Saipan. But I love sea glass. I think it's so beautiful. But if you think about what that glass has been through, the pain and the torture and the waves and just the pounding of the surf, Um, I think it's so beautiful. I look at this one piece right here with all of these ridges, and I think it just shows that beauty can come out of sea glass. And I think about that with our finances too, to where if we are willing to look and understand, like we understand how we got where we are, it's okay. And what can we do and how can we make it beautiful? So you saw my moment of truth. So this happened to me in November of 2020. I had already started this system. I was actually working as a cash flow management coach at the time. But what happened was in 2020, we actually had the best year we'd ever had. And I was meeting with my accountant to go over our estimated taxes for the year. Now, I've been working with this accountant for over 10 years at this point, and we were really good friends. And so I would take any excuse I had to go see her. And I could do these over the phone, but I'm like, no, I'm coming to your office. Let's talk. And it was different. I walked into her office and she wouldn't meet my eye. And I'm like, okay, that's weird. So I sat down and I started feeling a little uncomfortable. And she took a deep breath and said, well, the good news is you had a great year. And I went, oh, you know that if somebody says that there's good news, the good news is that there's bad news to follow. And so I said, yeah, we did have a really good year, but what's the bad news? She then proceeded to tell me that our estimated tax bill was going to be well into the six figures. To say I was heartsick is an understatement. I thought I had done everything I was supposed to. We had a great year, so I paid off some bills. I took a little bit extra out so that we could have some fun after COVID. And I thought I was doing it right, but I wasn't. I knew at that moment there had to be a better way to manage the cash. And I was bound and determined to figure it out and to find a system that I knew I could implement to where I would never have to feel this way again. So with that being said, that is why it matters, to where you can create a system that works for you, whatever your circumstances. So at that point, after into when you saw my financials, I had started changing my allocations so that I could pay that tax bill. I was starting to very rapidly save money, but that means I also had to cut costs other places. And so this system helped me do that. So let's talk about target allocations. So you cannot hit a target that you cannot see. I love that saying by Zig Ziglar. So we're going to first talk about target allocations, which is the destination where you want to go, how you want to be spending money. So we started with where you're at, how you're currently allocating your money, and then we're going to look at where you want to go. And then we're going to talk about your revenue target. So let's get into it. So where do you want to go? You really need to take time to evaluate your goals. What is your desire? So for me, my goal was to pay the tax man and be able to cash flow it and not have to get it out a loan or do anything like that. But then what are your desires? Maybe that's your immediate goal is to pay off a bill or to do some type of expansion, or you need some piece of equipment. But what's your long-term desires? Maybe it is to make a higher profit. Maybe you want to go on a dream vacation. Those things you need to voice. You need to actually say what it is you want. And then what's your end game? For us, our end game was selling with as much profit as possible and with as much cash as possible. So we're going to look at your present position to your destination. So in this sheet, you're going to say, what are your priorities? Where do you want your money to be going? And so you're going to, in column A, you're going to enter your annual. So the annual, the monthly, and the present position are all exactly the same from the first sheet that we did. You're just going to transfer it over. And then what are your target percentages? These are totally up to you, what your target percentages are. You get to decide. And so if you have absolutely no idea where to start and you're like, Vicki, I don't even know where to begin with this, you can Google, ready? I'm going to tell you exactly what to Google target allocation percentages profit first. If you Google that, target allocation percentages profit first, you will get a chart, a table that is in the book of Profit First that Mike Michalowicz has curated and said through all of the businesses that he has dealt with that those were typical target allocation percentages. I like having those out there just so you can see, but I don't want you to be married to those numbers. I don't want you to be stuck to those numbers because they may not fit your business. His book was written for brick and mortar businesses that have inventory. And so if that's not you, those may not apply. But if you're just curious, look it up. So for me, this is what I did. So again, I just transferred all of those numbers over into my present position. And so I had 2.56% in profit, 10.44 in owner's pay, 10.23 going towards taxes, and then 76.77 going towards operating expenses. I wanted to change those to the target percentages. And these were just numbers that my husband and I came up with. Well, I came up with, and I told him what I was doing. 10% for target or profit, 10% for owner's pay, and 15% for taxes, which left 65% for operating expenses. So once you have those numbers, then you've got to decide what to do next. And I'm going to speed up just a little bit because I'm running out of time. So if you put the numbers in there, you do the A minus the B equals the difference. And so you can see from the present position of 2.56%, I wanted to go to 10% for profit, which is a difference of 7.44%, which means I need to increase the profit category. I needed to decrease slightly the owner's pay, needed to increase the taxes, and I needed to decrease the operating expenses. So we put that all together. Those are the same previous two slides, just in one slide together. So you can see kind of how it all fits together, where we're at, where we're going, and then what we need to do to get there. And then there's the journey. A journey of 1,000 miles begins with a single step. If you were looking at my numbers, going from 2.56% profit to 10% profit is a pretty big jump. It's not going to happen overnight. And so we talk about the incremental steps, the journey along the way. So you begin with your present position, you look at where you want to go, and you decide what the first step is going to be. Now, you might have multiple columns that are your journey columns. You might not just have one column, you might not just be one step. And I would recommend, a good rule of thumb would be maybe 1% per quarter change. So this may take you several quarters to change. And that's okay, because as long as you're moving in the right direction, you're going to get to the destination where you want to be. So this was my step. I wanted to do it quickly. And honestly, there were actually a couple of steps in here. But for example, maybe you would go halfway with the journey. So I was going to change the profit allocation to 5% instead of the 2.5, and the 10% was too big of a jump. And then you just tweak all of the numbers. You just tweak them all until you get to where you want to be. So next we're going to talk about the revenue target. Okay, so we've talked about your current allocations, your present position, your destination, which is your target allocations. And now we're talking about your revenue target. When I ask people that I'm working with, what is your revenue target or what is your revenue goal? So many people say as much as possible. No, that's not the right answer. I want you to come up with a revenue target based on math. Okay. And you can do that. You have to have a number based off of your data. Your owner's pay, number one, and your operating expenses. Those are the two main numbers that you're going to need to be able to calculate a revenue target. Then, of course, we're going to fill in the blanks with the taxes and the intentional profit. I'm going to talk to you a little bit more about this before we dive into the math of that. So I want you to have a conscious spending plan. If you have never read the book, I Will Teach You to Be Rich by Ramit Sethi, it is my favorite. Up until recently, I was a die-hard Dave Ramsey fan. I am no longer a die-hard Dave Ramsey fan. My husband hates Dave Ramsey because he felt like he was everything. He couldn't have anything he wanted. Ramit Sethi teaches it just a little bit differently, to where you can spend extravagantly on the things that you love and cut costs mercilessly on the things that you don't. Now, this is your personal spending plan. So make sure you know that. Make sure you have a personal spending plan. And if you don't like the Dave Ramsey idea and you don't like the scarcity mode, then check out Ramit's book, because I love the way he does it. But it's really important for you to fund the life you want to live. So as you're doing these spending plans, write down things that maybe you can't necessarily afford right now, but is definitely you want to be in your future, because you want to put the energy out there into the universe. You want to commit to yourself that you want to go on that dream vacation. So even if you can't fund it right now, put it on your list. So first step you're going to be doing is you're going to be creating your own personal spending plan, which I call the conscious spending plan. That's what Ramit calls it also. And I like it because it does allow for some emotional spending. There's a category called guilt-free spending, where you can spend it on whatever you want and nobody can tell you that you can't. So you want to do that, make sure that you have your conscious spending plan. So as you're doing that, and as you're working through these different things that these exercises I'm showing you, make sure you know how much you need to take out of your business for your owner's pay. That's the number that's going to go with your conscious spending plan. So make sure you jot that down. You're going to want the number that you want to take out of your business for your owner's pay. On the flip side is the intentional spending. That does not have room for emotional spending. These are things this is the spending plan for your business. These things have to be driven. It's business calculated and data driven. There has to be a return on investment. You should only be spending money on things that increase revenue, decrease expenses, or keeps you out of jail. And if it isn't one of those things, then you need to get rid of it. But that's the second number you need to be aware of as you are building out these revenue targets. So your owner's pay amount, which is your conscious spending plan, and your operating expenses, which is your intentional spending plan. Once we have those numbers, then we can move on to calculating your revenue target. So the way this works is the very top part. You're going to start with your present position and your owner's pay. So you're going to look at the percentage of owner's pay of your current business revenue. And then you're going to enter the desired monthly take-home amount, including any shareholder distributions. So whether it's through W-2s or through owner's draws, you're going to, how much do you want to take home that is your living expenses is in column B. And then you take B divided by 8%. Let me show you how that works. So if we're looking at my owner's pay and say out of my business, all of my business revenue, 7.5% goes towards owner's pay. If I wanted to take home $8,400 a month, I would take $8,400 and divide it by 7.5%. That would give me a revenue target of $112,000 a month. So hopefully you followed that math. Play around with a little bit. Play around with changing the percentages and changing the dollar amounts so that you can see it very clearly how much revenue you need to be bringing into your business to take home your desired owner's pay. Okay, that was a lot. So what's next? The way that Profit First helps is it's considered a behavior modification technique. It helps you change your priorities. It helps, for me, especially when we first started with our taxes, my priority is funding that tax amount, that tax account. Maybe your priority is getting ready to scale. Maybe your priority is getting your owner's pay. You can set your own priorities with this system. and then set the targets. You have real, actual data calculated to create your targets. It helps you create accountability, not only with maybe your employees, but with your partner or with yourself. Check your spending. I have a tendency to want to buy software or new gadgets or things that will help me with my calculations, because that's where I nerd out. But it creates accountability with myself. And I love it because it allows for gradual improvements. Just a 1% per quarter change is going to help you get to your destination. Okay, final lesson and takeaways. Be armed with numbers. This is the tide chart for Saipan for this week. Now, when I first moved to Saipan, I knew that there was a high tide and a low tide, but I didn't realize that there was multiple tides a day. So there's a typical high tide and a low tide, but there's also like a medium tide or a midday tide. I don't know what they call it. But not only that, there's also this change in the low tide. It is similar with your business. Your business will have seasonal ups and downs, product ups and downs, monthly ups and downs. Knowing these patterns will help you be proactive instead of reactive. When we first started the dental office, September rolled around, our first September, and everybody canceled. Nobody showed up in September. It was just like, what is going on? But then October came and business was great again. And I'm like, okay, that's awesome. Well, the following year, it rolled around again. September rolled around, same thing. All of the patients canceled. Nobody showed up. Nobody wanted to schedule in September. And so then I started looking into it, and I'm like, what is going on with September? Well, it's an industry trend. Most people, a lot of dentists are really slow in September. And then they turn around, and October is usually the best month of the year. So we nicknamed it Sucktember and Rocktober. But once I knew that, come next September, I was ready. I was ready and I was prepared. Knowing the ebbs and flows of your business is going to help you be proactive instead of reactive. And if something is different that happens, it will help you recognize your changes in cash flow sooner before you're in trouble. All right, that's all I got. What questions do we have?
Wow, Vicki. Oh my goodness. This is such great information. I know we've got some people that came in a little late, so they're probably downloading the workbook and following along. But all of you, this is your opportunity to ask Vicki some really good questions. She delivered some great information, and I would love to hear questions that you have or even feedback from today's presentation. Go ahead and raise your physical hand, or you can raise your Zoom hand, whichever is easier for you. And let's tap into this expertise that we have in the room today. Do some little dancing until people get some questions going. Does anybody have a question?
I say this is often like drinking out of a fire hose. Like, it is a lot of information, and just being open to it, being open to looking at your numbers and thinking about it for maybe the first time is very helpful. Looks like Carrie has a question. Go ahead,
Carrie's got a question. Go ahead and unmute, Carrie. We'd love to hear what you have to say.
Vicki, I have to say thank you so much. First, with those pictures, it was a nice escape in the middle of the day. So thank you for that. I put it in the comments. I was totally with you going through the process and what we need to consider. And then you started talking about math. And I literally, like, my heart started racing. I'm like, I can't do this. I don't have a problem looking at the numbers, but I do recognize that when I have to do the math and figuring and projecting is when it gets really difficult and my anxiety goes up. And so I'm curious if there's anything you can offer to help with that.
So two things. I did try to simplify it to keep the math as simple as possible. So if you want, to go ahead and allow yourself the time, I am also a life coach, and allow yourself to feel that anxiety or whatever it is that you want to call it, and recognize that it is something unusual that you don't typically do. And of course, you're going to feel this way. And then, if you want to go ahead and try to dive in with the numbers, that is totally fine. The flip side is there are people who help. I am one who helps with that for people who really have a hard time with the math. As long as you're willing to look at the numbers and you don't want to do the math, I can totally help you with that. But understanding where you're at now and understanding that it is completely normal for you to feel this way, especially if you're not used to looking at numbers, that this is a very common response that I get when I first start talking to people. I had one client tell me when I met her that I told her, I said, so it's basically like I get to start digging around in your underwear drawer. And she said, no, she's like, it's like I stepped out of the shower naked and there you are. So I know it's uncomfortable, and I'm like, okay, well, I like the underwear drawer better. It is. It's, and that's why I do want to normalize talking about money, because we need, as business owners, we need to have these conversations. And the more we talk about it, the less anxiety upbringing it will be.
It is. Absolutely. Thank you so much. I appreciate that. I'm going to sit in the uncomfortableness of doing basic math, because it's the basic math. But thank you.
You're welcome. Thank you for your question.
That was a wonderful question, Carrie. It looks like we also had somebody else that asked in the chat, Vicki, about your business. So do you also do calls with clients as well? Tell us how we can, if people need more help, how they can get in touch with you.
Yeah, so I showed you my cash flow system, what I consider a cash flow system, and we talked about 3 items out of it, and I take clients all the way through the cash flow management system. We start with pricing and packaging, making sure that you're pricing your products to be profitable, and then we go into the packaging, your accounts payable, and then we also look at what we did today, which is your current allocations, your target allocations, and your revenue target. And then we come up with an implementation system, what works for you, because not everybody likes the same things that I do, or the same things, learning new software, or they're like, no, let's keep it simple. Everyone is different. So I create a cash flow management system for you with your preferences in mind. And then we do some forecasting and modeling also, so that we can look forward to the future as to see what's coming up. A lot of times people hire me when they're getting ready to scale, or just when they're starting out. In either way, at any time, I'm more than happy to help.
Wonderful. I was just reading some more comments in here about just a lot of thank yous from the attendees. You delivered so much impactful information, Vicki. Does anybody else have a final question? We've only got 3 more minutes with this phenomenal cash flow expert. This is your time to be vulnerable. Ask a money question, even if it's uncomfortable. This is how we get further into running really successful businesses. Cash flow is such a high priority with businesses. So Vicki is an amazing expert. She can answer lots of different questions. If anybody has another question. Again, I think, Vicki, we've stunned them. You have stunned them into silence.
Hey, I did have one final slide that I didn't share, if I can. It's just how to contact me. So if you want to contact me, I'm Vicki Rich Holman. So I joke that I've always had money on my brain ever since I was born, because my maiden name is Rich. But I'm on all the socials as Vicki Rich Holman, or you can use my contact sheet there. If you're on socials, probably the best way to get a hold of me is through LinkedIn.
Awesome. And it looks like one of our attendees has already messaged you on LinkedIn. So thank you, Nona, for doing that. That is wonderful. A big thank you to Vicki Holman and her presentation today. Oh my goodness, I took away so much value. I hope you all took away a ton of notes. Just as a reminder, we will be setting the recording for everybody that had registered or everybody that had attended. So you will get that recording. It does take about a week for us to turn that back around and send that to the attendees. So you will have all that information, including the QR code for the downloadable workbook. So if you did not grab that, you'll have that in the recording as well. And then just a reminder, if you want to save the information that was in the chat, perhaps somebody dropped in their LinkedIn address, or you do want to get that link for the download if you didn't grab it right now and you want to save it for later, feel free to save the chat. So you can do that. If you're not sure how to do that, you can go in the bottom right in the chat window and click the 3 little dots that should have an option for you to save the chat. So feel free to do that, and that way you'll have access to that information afterwards. And just a huge thank you to Vicki. This was such beneficial information. Oh my goodness, you took a very complicated subject and you simplified it so that we could understand. And I love the part about putting profit first, because that is truly putting what we really are here to do with our businesses front and center, rather than it being the last thing that we do as business owners to take profit. So I absolutely love this. I think this is such beneficial information. Thank you so much for all the attendees for being here. And thank you so much, Vicki, for all of your education.
Thank you for having me.
Thank you, everybody. We look forward to seeing you at the next LeadHERship Global event. Thanks, everybody.